Welcome back to another episode of retirementnewsonline.com here from our studios in Scottsdale, Arizona. And one thing about retirement that is often overlooked by consumers, and it's understandable, taxes. See, taxes don't retire when you do. In fact, they often become one of your biggest controllable expenses. And smart advisors help clients reduce lifetime taxes, avoid surprises, and create more efficient income in retirement. And joining us is Taylor Davis, HBW Advisory Services right there in Boise, Idaho. Welcome back, Taylor. And I guess the first question, planning withdrawals, minimizing taxes, because the vast majority of people, they're not thinking about minimizing taxes when it comes to retirement planning. It's mostly accumulation, but that really is, as we said in the beginning, the less you pay in taxes, the more income and the more cash flow you have in retirement, right?
When it comes to taxes and retirement income planning, a lot of people just assume that they're going to be in a lower tax bracket when they retire. However, we find a lot that people need about 70 to 80% of their income in retirement, and that doesn't always drop you into a lower tax bracket. In addition to that, if you've been married filing jointly for most of your adult life, eventually somebody's going to pass away, and that can create higher taxes when you're now filing single, get into IRMA and other things like that.
And then RMDs aren't really common knowledge about people. They kind of don't realize what impact, because the government really makes a pretty good return on that investment, but now they've extended it to 73, which gives them, some more opportunities there.
75.
Is it 75 now?
Yeah,
okay.
For people after turning 70, I forget because they changed it so much, but if it's 75 after 2030.
Yeah, okay, that makes sense. And so, again, that's something where I don't think people realize how they increase over time. And boy, that's income that some people don't need. But then immediately the taxes come there, and so that's a problem. How do you solve that?
RMDs can create a huge issue.
And I want to say they're required minimum distributions, because RMDs is jargon. We don't want to do that, but the government requires you to take distributions because they want to get paid back for all this deferral.
RMDs are designed to deplete your retirement account through the rest of your life. And so every year you have to withdraw a certain percentage of your retirement account. If you have $100,000 in there, it's going to be around $3,700. $1 million, it's going to be around $37,000 the first year, and that number is going to go up every year. And a lot of people that don't need that money, if they have Social Security, if they're one of the lucky few that still has a pension, or if they just have no debt, that's all of a sudden potentially jumping up their tax bracket, potentially jumping up their Medicare bracket. And then again, it's kind of something we call the RMD tax bomb, when one spouse passes away and now you're forced to take money out, but filing single, that can really destroy you in taxes.
Yeah, taxes, why they always call things around taxation as bombs or exploding things or something like that, that should tell you that they're undesirable. So you would probably agree that some people would say that taxes are on sale now. I mean, we expect them to go up at some point because they got to pay for all the stuff we're bombing.
Historically, taxes have always gone up. Social Security is going to have to continue to be funded. Medicare is going to have to continue to be funded. And how do you do that? You either raise the income limits for Social Security and everything, or you start increasing taxes.
With lower tax rates now, so is there any reason why somebody shouldn't do a Roth conversion?
I think that Roth conversions really, they need to be done on a personal level. So I have an advantage because I'm also an enrolled agent and I do taxes. And so, especially with younger clients, a lot of times they always hear, put it away in a Roth, put it away in a Roth. But many times they're making so much money right now that we need something to lower their taxable income, because at a young age, they're getting hammered in taxes. And so for those people, we put money into traditional accounts now, and then in lower income years start to do Roth conversions. But Roth conversions aren't right for everybody all the time. It takes really looking at your income, looking at your after-tax income after the standard deduction and everything to find out how much you can convert, when you should convert it. If you are going to convert it before age 59 and a half and you withhold taxes from the conversion, now it's an early withdrawal and you're paying a 10% penalty on it. So there's a lot of things to think about than just clicking the button and doing a Roth conversion.
Well, good answer, because it always depends on your personal situation, doesn't it? Lastly, how do you coordinate tax planning across like multiple income sources? In other words, Social Security, pensions, real estate. Social Security, it's been said that maximizing your benefits is as much about tax planning as it is about some other way to increase your monthly benefit. How do you manage all that?
We use financial planning software to put together in-depth, detailed plans, and especially again, since I do taxes, I can see where everybody's income is, where that income's coming from, whether it's capital gains, ordinary income like from traditional retirement accounts, or if they have tax-free income from Roth IRAs. So it really comes down to putting together a solid plan, and then if you want to do something like a Roth conversion, what are you basing that conversion on? Are you looking at capital gains brackets? Are you looking at income tax brackets? Or are you looking at the IRMA brackets, not wanting to jump up Medicare prices?
That's Taylor Davis with HBW Advisory Services right there in Boise, Idaho. And again, if you were wondering about taxes or anything else linked to retirement, you can go to retirementnewsonline.com. And thank you for watching.